So look, two of our very exciting portfolio companies, one focused on the edtech space, one in fintech, stock trading, both operating in more than one country. You both went from effectively no revenue and high users to users still being there, but scale up in revenues and an improvement, significant improvement in margin profiles. What's the story? Like, how did you guys apply what you applied to get to this point and going forward?
So my name is Ahmad Hammouda. I'm one of the co-founders and the CEO at Thndr. I used to be a GM at Uber at the same time when Hamdi was the GM as well. You try to explain what we're trying to do. We're trying to allow everyday individuals who everyone thought are not capable of investing on their own to invest in our region, local investment opportunities, who everyone also underrated or underestimated. So before Thndr, it's either high net worth and institutions investing, it was either robo-advisory or another platforms making it easy for you to invest in the US stocks. What we're trying to do is actually doing two things. So allowing the connectivity, so very easy way to download an app, open an account, fund your account, which is Thndr. And then we also have a sister brand, which is Rumble, which is building the information gateway around the different investment products in our region. Over the last year, we're now the #1 brokerage house in Egypt. So during the last quarter, more than $1 billion of trading during the quarter, bigger than EFG Hermes. And we've done it very differently, like no margin. More than 60% of our users come from cities outside of the capital city. 84% are first-time investors. So we're actually very true to democratizing investing.
I was just addicted to creating more impact after seeing the jobs that were created at Uber. And I thought, honestly, that there's no more impact that can be created to the region than education. So we started Abwaab, and in a nutshell, we help students get ahead at school and be set for a more prosperous life by replacing their dependence on after-school tutoring with an online experience. Some numbers, you have around 100 million students below the age of 18 in the region, dependence on after-school tutoring across all income levels of the population, and we're focused on the mass side of the population rather than the top couple of percent. We're operating in Jordan, Egypt, Iraq, Saudi Arabia, briefly now in Algeria, and about to enter Oman.
And I think a lot of the growth that we have seen over the last year is actually a function of what we have been building over the first 2 years, not prioritizing growth, actually focusing a lot on making sure that this is product-led. Whatever we're iterating, whatever we're building is actually the final product. Like, let's actually have a playbook. So when we launch another product, when we launch another market, we know what works. And I think two things stood out for us, which is one is it has always been product-led. So we've never done a hybrid model between traditional brokerage and whatever we're trying to selling. It's data-driven. So when we started Thndr, only 0.5 of every sign-up would fund their account, like half a person would fund an account. And during last quarter, it's 25%. And it's all a function of introducing a new feature to the onboarding, introducing a new investment product, and seeing how this impact the overall conversion and the growth, and sticking to knowing that this is the product that you are selling.
Hammouda and I were both at Uber around the time of the IPO. I know you guys were happy with the Careem acquisition, but genuinely we were not. We were like, we spent 5 years building a business against Careem, and then Uber spent like $3 billion on it. But one of the challenges that we faced as GMs was taking the company to profitability, because we had a lot of pressure from the IPO time. In 2019, we had to just start making money, and I think both of our countries were the first to do that. And that was one of the learnings that I took to Abwaab, saying, listen, and that has been our journey at Abwaab: optimize for engagement, optimize for trying to monetize. And then 2023 was about trying to see if we can scale revenues beyond our initial market, and we started to see that growth. So we went from like $1.8 million in revenue in 2022 to around $7.5 million in 2023, and now we expect to 2x that. And then towards the end of 2023, we're like, wait, now we need to start having positive unit economics, ideally from the first purchase even. So
I was told that you had a picture of Aboudi with a dagger hanging over you in the office.
If I start by focusing on the monetization aspect, I miss on whether I'm actually solving a problem or not. And then I make sure that this problem is actually worth the money of those.
I think on that point, what's very important is you have engagement, monetization, growth.
Yeah.
The maintenance piece is important, right? Because if you don't grow at the same rate, then what do investors potentially think when you do eventually raise and so on? So
yeah, I think like to this point, we realize that growth needs to come not just from keeping on attracting like new customers. We just need to build like a strong user base that's continuously subscribing and resubscribing with Abwaab, and that's how we reinvented our offering to become from like a learn at your own pace platform to become like a guided learning experience. So right now, whenever a student signs up on Abwaab, they get appointed an academic advisor that handholds them throughout the entire academic year. And what that has shown is continuous repeat purchases, ability to improve our price, enhanced margins, and also introduction of new services that add further academic value. Now, that's one of the main things that is supposed to drive further growth, not from new customers only, but from the existing customer base, as well as expansion in revenue in terms of upselling and everything around that. Last week we closed our all-time high sales week of $500,000. So we're still growing also quite well on the new user side with positive unit economics.
Yeah, for us, I think chapter 1 was validation, chapter 2 was monetization, and I think we reached monetization along with profitability and positive cash flow. So we generated positive cash flows during last quarter. For us is actually sustaining what we've achieved, and there are 3 big avenues for us that we're focusing on. The first piece is we're actually doubling down on the advisory piece and on the information piece, because this is 2 is there is another market that share the same level of fundamentals, the same infrastructure, regulatory infrastructure, the same technological infrastructure, which is Saudi. And I think we're very, very ready for Saudi. No one is doing what we're doing in Saudi. And the third piece is actually countering the overall cyclicality of investing. So everyone knows investing is a high margin, yet high cyclical product. So actually complementing our investing offering with a credit card. So I promise you, I have a slide on my pitch that has Abwaab. And I don't know where is Fahim. I think he left. But it has Abwaab and it has Maksab. We always use this example. It took Apple 4 years to go public. It took Amazon 4 years to go public. Which means as an investor, you were able to generate wealth with Apple and Amazon since their 4 years. Our mission is twofolded. From one angle is what we talked about, is actually evolving this region from a consumption-driven economy that spends like no tomorrow. It's an investment-first mindset. You get your salary, you allocate a portion towards your investing. But also, those savings should finance the next Amazon and Tesla of our region, which we believe will be Abwaab, will be Maksab. And I promise you, and I will show